Hey everyone! Welcome back to the Penny Street Journal. Today, we're diving into one of the most common investing questions. Should you invest in ETFs or mutual funds? Both can be great options, but there are some key differences to understand before choosing which one is right for your portfolio. In this video, we'll break down what exactly ETFs and mutual funds are, their key similarities and differences, their historical performance, fees, and more. By the end, you'll have a better understanding of which investment vehicle may be better suited for your goals and needs. Defining ETFs and mutual funds. ETFs, or exchange-traded funds, are collections of securities, like stocks or bonds, that are packaged together into a single financial instrument that trades on stock exchanges. Some key attributes of ETFs: trade throughout the day like stocks, contain a basket of investments to provide diversification, allow for margin trading and short selling, often have lower expense ratios than mutual funds. Mutual funds are also portfolios of securities like stocks and bonds. But unlike ETFs, mutual funds do not trade on exchanges. Some key attributes of mutual funds: trade based on end-of-day net asset value or NAV, offer active management by fund managers. Some mutual funds have minimum investment requirements, often have higher expense ratios than ETFs. So in short, ETFs trade like stocks, while mutual funds are priced and traded once a day based on the value of their holdings. Historical performance comparison. When it comes to performance between ETFs and mutual funds, there are a few key points. Broad market ETFs like SPY and VTI have historically matched or even outperformed comparable mutual funds like VFinix or VTSAX. This is likely due to ETFs having lower expense ratios. However, actively managed mutual funds have outperformed comparable ETFs in certain sectors where active management has added value. For example, focused sector funds in real estate or healthcare. Over the past 10 years, the average U.S. equity mutual fund has returned 11.2% annualized, compared to 11.7% for the average U.S. equity ETF, so a slight edge for ETFs. International equity. ETFs and mutual funds have been nearly identical over the past decade, both returning around 5% annualized. So in broad terms, ETFs and mutual funds have delivered comparable performance historically in most categories. ETFs maintain a slight performance edge, likely due to lower fees, but actively managed mutual funds can outperform in certain sectors. Fees comparison. When it comes to fees, ETFs generally have a significant cost advantage over mutual funds. The average ETF fee is around 0.44% compared to 0.71% for the average mutual fund. Over decades, these small differences really add up. For a $100,000 investment, earning a hypothetical 7% annually, the 0.27% fee difference amounts to over $40,000 less in fees over 30 years with an ETF. Some index ETFs like SCHB or FSKX now have expense ratios as low as 0.03%. Very few mutual funds can match that. So if keeping fees low is a priority, ETFs have a clear advantage in most categories. However, some index mutual funds are becoming more competitive on costs. Soon we will release a video in which we will explain in detail why the fee is one of the keys to successful investing factors to consider. When deciding between an ETF or mutual fund, here are some key factors to consider. Fees. ETFs offer lower costs in most cases. Trading. ETFs offer more flexibility for trading and short-term moves. Diversification. Both offer wide diversification. But mutual funds have more options. Minimums. Mutual funds often have higher minimum investments. Tax efficiency. ETFs are often more tax efficient than actively managed mutual funds. So in the end, is one better than the other? Well, it depends on your specific investing needs and preferences. In most cases, ETFs will be a better choice that will help you achieve your financial goals faster, because ETFs present a cost-effective way to track markets and indexes. However, mutual funds allow for active management and more fund selection, albeit at a higher cost. Curious about those hidden fees we talked about? Stay tuned for our next video, where we deep dive into the impact of fees on your investments. To make sure you don't miss it, hit like and subscribe. See you next time.